What is going on, guys, and welcome to the video. If you've been following my channel for any length of time, you know that I rarely say things like what I'm about to say, but the setup is there and we need to discuss it, so I have to say it. This week could determine if we get an epic rally to the end of the year or if there's still a lot more pain to go and this was just the start of a much larger crash. It is going to be the week that shapes kind of the market for the rest of the year, so let's break it all down and see what it means for the stock market. And I will lay out the scenarios for you so you know how Wall Street will react, and I will tell you exactly what I plan to do in each of those scenarios as well. I just ask in exchange for you to gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. Make sure you got those notifications on as well, or you will miss my videos, unfortunately, because I don't know, it's YouTube. All right, so I'm going to lay out the 4 chaos points that if they all happen will be just a disaster for the stock market, or it's going to be the exact opposite and be the start of an epic run. We're at a massive tipping point kind of in the market where the stage is set for a huge rally to end the year, but these all need to go right in the end. So a massive week in earnings this week is coming as all the big dogs report once again. So far, earnings have been rather exceptional given that the earnings apocalypse was coming this time because, you know, in June it was coming too then, but it didn't happen because that's what short-term prediction folks kind of tend to do. They give you all this doom and gloom and tell you it's coming, and then when it doesn't, they say, oh yeah, we kind of, dodged a bullet this time, but next quarter it's gonna be here. So far, this next time or next quarter has been strong outside of Snap's earnings. Bank earnings were all strong, and most companies aside from the ones that pre-announced have maintained or actually raised their guidance, and there have been far more double beats than we saw last quarter already this quarter. But don't worry, I'm sure the apocalypse is just delayed until next year because this chart right here proves that it's coming next year. I mean, look at it, guys. It's a pretty chart and graphs and all those pretty lines just prove it. But all eyes will be on Amazon for what the consumer is doing in regards to the economy, our spending habits, and all of that stuff like that. Consumer sentiment is at a pretty low number, but do our actions actually match our sentiment? People can think the economy is in the toilet, but if they are spending like normal at the same time, basically their actions are saying otherwise and the economy is still strong. Airlines reported record demand and they see no slowdown, but what is Amazon seeing on the consumer spending side? So Amazon's earnings and of course guidance will give us our biggest clue to date on that. If that is good or at least okay and they maintain guidance, there is chaos point number 1 right there to a big rally. That would mean consumer spending is not only good on travel and leisure, but on consumer spending as well. And that bodes well coming into the holidays for sure. Next up, Wall Street will also be looking at Google for what advertisers are spending and are they seeing a slowdown, and if so, by how much? Basically, it's a commentary on the health of businesses themselves, and healthy businesses spend more money on advertising, and when times get tough, they kind of cut back. Now, the banks just reported and they said corporate balance sheets as well as personal balance sheets of their clients look very strong, so that means we know they have money to spend. The question is, how much are they going to leave on the balance sheet to prepare for the slowdown coming next year as the Fed rate hikes start to take effect on everyone? So not only will the numbers matter, but also how they will forecast guidance based on the advertising dollars coming in, and that is chaos point number 2. And then we have Apple, who has for 2 earnings calls in a row, or I guess really 3 now, has pulled a rabbit out of the hat with ridiculously high expectations, and everyone kind of missing right and left, especially back in March, and the market basically in free fall. There was basically Apple who saved the day with incredible earnings after incredible earnings. They have literally been propping up the entire market almost all year. Can they keep the streak going and give us a positive chaos point number 3? Well, if Apple falters or sees significant weakness in their business coming into the holiday season, expect them to finally fall, which will of course cause the entire market to fall as well. However, kind of on the flip side, if all the rumors are false about the new iPhone sales being terrible, and I never listen to the rumors honestly because Apple is notoriously kind of tight-lipped about everything and has been forever, but if the new iPhone sales are actually really good and they see a strong holiday season, there's chaos point number 3 right there that will almost assuredly lead the markets forward for the rest of the year. And finally, we have the 4th point, which is the Fed. Oh boy, all right, here we go now. Let's see if we can get through this all. If the Fed shocks us in any way in a couple of weeks, Look out is all I can say, because that will be chaos point number 4, and it could be good or bad. But why would they shock us? Well, it's because the behind the scenes stuff that will dictate what the Fed does now and create that chaos point and the massive run or fall in stocks that makes this chaos scenario completely possible. And we'll get there, guys, in just a second as to what that is. We'll get there, I promise. But if the chaos reigns, you had better be prepared, because things will move fast. And if you think the media and YouTube and the markets are kind of all over the map right now, or over the past 6 months they've been all over the map, you have not seen anything yet, my friend. Prepare for the chaos now. You have the time, so make sure you have your plan laid out. And if you don't know how to do it, or you don't have a plan, Google it. There's a ton of free content here on YouTube. Join my group or another group that offers that sort of thing. It doesn't matter, just prepare for it right now. Don't wait until it happens and then go searching for all the fear videos that will explode everywhere, or all the hype videos that will explode everywhere, and try to figure out what to do. I mean, it's either going to be going to the moon or we're going to zero. It's going to be one of the two, and it's going to be all over the place. You will make mistakes and maybe even completely panic or FOMO, depending upon what's happening, instead of being able to calmly and coolly take advantage. So please plan and be prepared. So what is the behind the scenes that may create this scenario and will dictate the Fed policy? It's actually something that a lot of people don't like to talk about, but it has been the reality every election cycle for forever now. So it's not a partisan issue, and both sides of the political aisle play the game. So please don't start with blaming one side or the other. They both do it every time, and they both are putting equal amounts of pressure on the Fed. The Fed will not want to be blamed for the midterm results. Both sides will push for the Fed policy to fit whatever the narrative they need it to fit at the time to win, and that changes every cycle, so they all flip-flop. I know, shocking, I know, nobody's shocked by that. But the Fed historically has been very accommodating leading up to an election cycle, because they don't want to be involved in any of those narratives. So because of this, and the pressure they will feel very heavy here shortly in November, the Fed cannot be aggressive in November, and if they do stay aggressive, they will absolutely give a positive spin on things, or signal that they will start to slow the pace of rate hikes moving forward. They have finally admitted that they are behind, so they are having to be aggressive, but also not wanting to be a narrative in the election cycle means they have to make sure they do not send the market into chaos and panic coming into those elections and all that sort of stuff like that. So if we get a 0.75 raise again, expect verbiage afterwards to reflect a slowdown of the rate hikes to see how effective they are, and more importantly, give a positive tone to an otherwise negative event. I could also see them kind of shocking us to the good side with a 0.5% hike instead of the 0.75, but the chances of that are much less likely, so I think we get the 0.75, but it is possible they do the 0.5 instead. So if either one of those happen, those are honestly going to be positives for the stock market, and it will continue to march up, and we may get that rally that we think we're going to get. Now, if they give us 0.75 and they say they're going to continue to raise aggressively because they are thinking 5% or more is where they want to get to now, look out. And that's all that I can say, because that's enough to stifle any rally and send stocks down. Now, do I care about that, or am I concerned at all? Honestly, no, I'm not at all. And I actually welcome it, as they are just short-term headwinds that will give me some incredible discounts. This is how real wealth is built, through times like these. What, suddenly Apple finally has a bad quarter and it's a terrible company and I should run from it? The Fed gets really aggressive and now I'm supposed to believe Tesla is not going to sell every car it produces next quarter and honestly through the rest of next year? That's ridiculous to me, and it will simply be an opportunity for those that are prepared and have a plan to take advantage. So please do that most of all. Get that plan and get everything ready so you can take advantage if that happens too. So hopefully this was helpful. And if you don't know how to get a price target or how to do evaluation and want a step-by-step process for doing that, building wealth, and you want direct access to me and much more, remember to check out the pinned comment down below to become a member and at least look at everything you get. And click this video here for the stocks I'm still buying in this market, and click here for exactly what I'm doing to make huge money in this market. So thanks for watching, and we'll see you in the next one.